Well, the round table had as a provocative title, Europe after the US elections. Are we still doing the right things in banking and in insurance in our regulation? Now it seems that President Trump wants to dismantle his regulatory environment, and that was what was debated. I think that we should make Europe great again, but Europe should stand united. There is broad consensus here in Europe on the package that was adapted and the package of rules that was adapted after the crisis. And I still believe in them. It is true that we have to calibrate, that we have to look hard, but that is why the Commission also announced its review of the Capital Requirements Regulation and Capital Requirements Directive. That's why we have the call for evidence. And that's what we're doing. But deregulate or dismantle, no. And by the way, I don't think that the United States will be doing that. They are looking at the rules as they see fit, but I believe that they won't have a parliamentary majority to really dismantle Dodd-Franck.
US House of Representatives passed the Financial Choice Act. It's a regulation which changes everything which Dodd-Franck enacted after the global financial crisis. The critical point is here that the whole Financial Choice Act is more a microprudential approach to financial regulation, and it's rolling back the macroprudential approach from Dodd-Franck Act. So it completely neglects the system view on financial regulation and financial stability. When the EU wants to react to deregulations in the US, it should not lessen its standards, but it should promote new financial technologies which will bring more benefits to the consumers, but also have their risks in mind and react appropriately.
Well, Donald Trump has said a lot in the last number of months, and of course in the course of the campaign. Whether or not he holds good to his commitment to abolish the Dodd-Franck Act, which was the singularly most important piece of legislation in the United States post-crisis, to deal with the question of limiting risk across the banking sector, is another matter entirely. I think the important point for Europe is that we have the building blocks in place. We have our new capital requirements. We have made very clear the rules for the banks into the future. We've created, I think, much less risk as a consequence of these building blocks. So we're not going to change from that, irrespective of what Mr. Trump does. Of course, we're aware of his plans, but I think he'll find it very difficult to get those plans through the US Congress and ultimately into law. And I think ultimately we've got to work with the US administration, with Congress, to make sure that they're aware of their international obligations. The new financial regulatory piece post-crisis is not going to be handed up to anyone. It's too important for financial stability in Europe, too important to our growth agenda in Europe, too important to ordinary people's lives, that we never go back on allowing light touch regulation. And I think my main message today was one of supporting the essential EU legislations in place, of course tweaking it, reviewing it, making it better, making it more productive, but not fundamentally undermining it, as Mr. Trump wants to do in the course in the United States.
We think that convergence in terms of regulation is really important, but at the moment what we see is a lot of convergence at international level, and in terms of regulation that pertain to the groups. Now, groups are made out of a lot of different subsidiaries, and so we would like to see more prominent the discussion around the convergence between group supervision and the local supervision, or what was referred to in this discussion more as the micro-prudential regulation. With Solvency II, we have seen that it started with a common rule book, and now in its implementation, 1.5 years into the game, we see already the convergence diminishing. And if we want, as an industry, to be more effective, to reap the benefit of strong and solid regulation operationally, we are relying on this convergence, not just internationally for insurance groups, but also what I would say more vertically in terms of what are the different regimes that the different subsidiaries we operate through are exposed to.